G'day folks, Jim here from FX Charts, Thursday the 12th of December. Thanks for tuning in. Well, the euro remains reasonably firm today. It got up to 138.10. It's capped up there by a good selling interest heading in towards the major resistance towards 138.30. And also there was some selling of the yen crosses, euro yen, Swiss yen, sterling yen, all came a little bit lower. So that kept a bit of a lid on the euro. The US dollar though remains pretty much under pressure still. There's confusion over when tapering will or won't begin. Today there was a budget agreement reached in the States, and that made the equity markets particularly think that tapering may be here sooner rather than later. The equity markets had a bit of a tough afternoon in the States. Didn't really flow through to the currency markets though, and the euro's actually pretty much unchanged at the moment from about this time yesterday. Dollar yen, as I said, the yen headed a bit higher, the dollar's a bit lower against it, as are the crosses, but really it's range bound. Sterling took a bit of a hit. That was partly on the back of euro yen, and there's some decent real money sales of cable as well. The Swissy has been range bound. It has made new multi-year highs today by about 10 or 15 points, but it's back roughly where it was yesterday. The Aussies lower. The General Motors announcement didn't help the Aussies cause really, or the consumer confidence data yesterday was weaker than expected. Today we've got the jobs numbers, and if they're soft, well, I guess we probably expect the Aussie to go back under 90 cents. And the Kiwi, the RBNZ have just announced no change in their rates, although a 2014 rate hike looks pretty likely, and has seen the Kiwi underpinned. So if we go to the charts and have a look at the charts here, we've got, let me just open this up a bit. Right, we've got the euro here, it's 4-hour chart. Now, we're sticking pretty much the top end of this channel at the moment, and I wouldn't be surprised to see this 138.30 area hold. That's the top here. If we look at the weekly charts, 138.30 is also 61.8% Fibonacci retracement of the whole move down from 149.40 to the lows. So this is going to be a strong level to try and break, and I don't think we're likely to do so today anyway. There's not really an awful lot of data out. So the dailies though, they are still pointing higher, and if we do take out 138.30, as you can see, there's not really an awful lot there to stop it heading a fair bit higher, and the next big Fibo level comes in above 142, so 142.5. So a break of 138.30, I think, will probably take us pretty quickly to 140, and above there to as I say, 142.5. That remains to be seen though. A failure here would, let's go back to the 4-hour chart. A failure here, keeping us in the channel, would probably take us back down towards sort of 137.20. Well, that's 136.90, this first Fibo level. Don't think we're going down there today, but it is a possibility. Dollar yen, well, that's it's got its double top at 103.40. It's been down to 102.15 today. It's now sitting around 102.5, and I suspect 102, 103 is probably going to cover it on the session. The 4-hour momentum indicators do look a little bit lower, although they're not really that convincing. The dailies also are beginning to point a little bit lower, so I suspect, if anything, we're going to see 102, I think, before we see 103. But on the day, probably not a lot going on. Cable, well, that's it's taken a little bit of a hit, and the indicators do suggest we might head a bit lower still. That's a 4-hour chart. The dailies also look as though they may be topping out, so maybe we do get a move back to sort of 163. For the time being, though, while the euro stays fairly range bound, I think the cables probably like to do so as well. So I would think the 163, 164 may cover it today, and certainly there'll be some decent selling interest above 164 should we see it. Dollar Swiss, well, that's made new multi-year lows, as I said. Let's just have a look at the weekly charts here. I'll blow that up. Right, okay, on the weeklies, yeah, we made a new low down here at 88.40, I think it was, but it's come back. It's sitting on this Fibo support, and while that holds, and while the euro's doing not an awful lot, I would expect I'd expect dollar Swiss to sort of just hang around here really. We have got the Swiss National Bank meeting later on today. I don't think that's going to have too much effect. I don't think rates are going to go anywhere there. But we'll probably have some rhetoric from the Swiss National Bank about keeping the Swiss franc weak against the euro, and I suspect maybe, if anything, we might get a little bit of a move back higher in the dollar, because the 4-hour indicators are slightly overbought. They look as though they're trying to turn a bit higher, so we may see a bit of a move back up towards 89. The Aussie, poor old Aussie, took a bit of a hit today. I think probably celebrating the fact that it's its 30th birthday, and it's just repeating what it did 30 years ago. Came off quite sharply. It's looking as though the 90-cent level is in for another test. We've got the jobs data out, as I say. Expectations, I think, for about a 5,000 increase in the jobs created, but with unemployment moving up to 5.8 from 5.7%. So we've got this low down here is 89.88, currently at 90.40. Now it may be that we've seen the bounce and that was it. I'm not really sure that that's going to be the case. But 91.67 is very strong resistance, and if we were to go above there, then I do think we're heading back toward 92.60. But in the meantime, we have to say that the 4-hourly indicators are not really suggesting that's going to be the case today, and the dailies. Well, the dailies are a little bit oversold, and they're not telling me yet that we're due to resume the downtrend in any aggressive sort of fashion. So I still think that possibly dips are buying opportunities over the next couple of days. I wouldn't be getting too bearish at this stage, but certainly if the jobs data does come out weak, then we can expect a test of this low. The Kiwis just bounced a bit after the RBNZ left rates unchanged, where it's at 82.5 at the moment. Yeah, so it went down to 82, the figure, overnight, and has bounced off there. The dailies, well, it's very choppy, as you can see. I'm not sure that I really want to be too involved with the Kiwi at the moment. It's just too much like hard work. We're sitting right on this sort of pivot here, and above the 82-cent level, which dominated trade up until recently. Below there, we've still got the 100 and 200 daily moving averages across now. It's about 81.65. That's going to be important support, and the resistance up here at about 83.30. So that's about it today. I don't think we're going to see anything too directional in any of the currencies. It'll be the Aussie will be the main interest after the jobs data. Otherwise, it looks to me as I think we might be fairly range bound, and that may be the case going into next week, when we've got the FOMC, the final one before Christmas. Elsewhere today, we've got the EU industrial production, I think it is, and US retail sales. So they'll be the key drivers later on today. But I don't think we're going too far in either direction in any of the majors. So that's really about it for now. Have a good day's trading, and we'll talk to you again tomorrow. Cheers.